today's event is hosted by Admiral Markets. I see that you are very nervous to see us start. We have a lot to talk today, so excellent. It's just 6 o'clock Central Standard Time, or always on the Mondays, everybody in the same time, so don't forget to be here in exact time. I hope that you can listen to me. I think that I did sound check. My audio is fixed. So I wish you everyone good day, good morning, good evening, wherever you live, and we may start. Just before we start, there is a disclaimer, as you already know. By proceeding, you're accepting the risks of all Forex market parts, so we can proceed further. Today agenda will be: what is technical analysis, what are characteristics and principles of technical analysis, what is fundamental analysis, how to solve conflicts between technical and fundamental analysis, and intraday analysis. I just want to state that I will use some abbreviations. I will also have, in one of my next webinars, I will show you Forex glossary, so you will know basically what those abbreviations are for. TA stands for technical analysis, FA stands for fundamental analysis, intraday analysis is usually called intraday setup. So I will use those Forex glossary in one of my next webinars to show you how you can read our analysis, or maybe other traders' analysis, so you will know what those letters are for. So because, well, you know, many of you probably know what technical analysis is and fundamental, but it's okay to remind you again, because I have made up, I will show you how I do and what are my time actions for using intraday analysis, and what I do, I will show you that a little bit later. But let's talk about technical and fundamental analysis and what is more important. These are all my opinions. So, well, I may have some contrarians and some other opinions, but just to know that this all webinar series are my personal opinions, and I just present you what I have conducted and what I have learned through all of my full-time trading career. So this is mostly based on my experience. And you know, I have never written any book. I have never done any how can I say, web course on DVD. And this is the easiest way how I present my students and my followers and readers and analysts who follow my work. And this is basically all summed up. I just want to keep those things simple. And by keeping things simple, I think that many of you understand what I talk about and what I want to say. If it was a little bit complicated, I think that it won't be so good. So let's keep it all as simple as we can. Right? Okay. So we can start about what is technical analysis. In shortest, that is a methodology of forecasting price action direction through the study of historical price data. So there is a methodology of forecasting price action, its direction, through the study of historical price data. Technical analysis, or TA, is very subjective. And that means that even if we are looking at the exact same chart, setup or indicators, that doesn't always mean that we will come up with the same idea of where the price may be heading to. So it doesn't mean that if we see the same picture that we will do the same thing. You know, many traders ask me today, would I short, for example, euro? As you already know, I will show you that example later. I did some analysis early in the morning, and I said that 31.75 and 32.00 is shorting a zone. Well, yes, indeed, it was shorting zone. Well, you know, maybe some of it got long when 32 got broken, got some 10, 15 pips. Well, then again, 32 or, well, I don't know, 32.05, some of us shorted there and got again some 10, 15 pips. So, no, even though if you're looking at the same picture, we won't do the same thing, because market can be very unpredictable, especially when fundamental news kicks in. So I will show you, I will teach you what you should do in order to avoid conflict. And that is the permanent battle between technical analysis and fundamental analysis. It's a permanent battle between technical traders and fundamental traders. Well, I can say for me that I'm both of those kind. But I prefer technical analysis. I know how to deal with fundamentals, but I'm a technical trader and I always follow my charts. And when we talk about charts, I may say that I have noticed that many analysts, foreign analysts, especially those who always post on Forex Street and Forex Factory, some of my friends also use many indicators and many other things to show the analysis. I'm an old school trader. Maybe I'm an old school technical analyst also. And old school technical analysis is based on candlesticks primary and chart patterns. If you followed some of my webinars localized in Serbian and some of my webinars with Chris, we showed you basically what candlesticks are. We will have some, I think, next webinar, some of our next webinars will be about chart patterns. And that is what I use to determine price action for that particular day. I prefer also MACD. That is also an indicator that others use. But I don't do modern technical analysis. Modern TA uses a number of indicators such as RSI, Bollinger Bands, moving averages. Both approaches are good if you know how to read the charts. But you cannot always do each of that. So you need to make up your mind. Either you will be a pure price action trader, basing your knowledge and your trading career on indicators, or you will be maybe an old school trader who base your trading setups on candlesticks, chart patterns, and a few of those indicators. So technical analysis is absolute necessity. That means that just before you start to trade, you need to do your analysis. Your analysis is a homework, and you need to do that always before you enter the market. If you don't do the analysis, you will be susceptible to naked trading, and the naked trading is based, well, mostly based on gambling. I'm not talking about traders who trade for 10 years and they memorize each of patterns and they just need to see the charts to know maybe where the price will go to. But I'm talking about trading blindly. I'm talking about trading when you presumably don't use any of indicators or you don't use any of candlesticks, chart patterns, and you go blind with your trade. So you don't trade, you gamble. Why am I talking with you about technical analysis? As you already know, as I told you, if you were following my and Chris webinars, you already know that by entering a trade, your chances for profits are 50-50. So you can either have 50% to win or 50% to lose. So you will either win or you will lose. Eventually, you will go at break even, and eventually, you won't be on a positive zero. Your how can I say, equity curve will be negative. Why? Because you didn't stack odds into your favor. By doing technical analysis, your favor for your win goes to 60% at least by using a good proven method with maybe 1 or 2 indicators, or with a good knowledge of support and resistance levels. Your win-loss ratio will go to 70-30. And if your money management is good, that will turn your 70-30 wins into a constant profitable trades. So now you understand me why I'm always for a good technical study. I never ever trade without analyzing the markets, and that means never ever. And maybe some of you will tell me that there are some articles and there are some threads about technical analysis and how fundamental analysis is better than technical, and there are many misconceptions and mispriced studies of technical analysis. Well, I can say that that is not true. And I will tell you in the next set of slides why that isn't true. And again, I will again tell you why you should do your technical study. If you don't do it, then okay, no problem. I'm publishing every day technical analysis on my blog, on Forex Factory Spiders Den, on Worldwide Investment Spiders Den, on Facebook Admiral Markets page, and for Admiral Markets blogs. So you can follow me. I'm okay with that. That is what I write. I also go with it. So basically, you won't go wrong if you follow that. At least you will learn. You will learn how I do it, why I do it, and why that is so important. The biggest thing and the biggest flaw in technical analysis in TA is it stands in contrast to fundamental analysis. And I will answer to you all of your questions later. No problem. Just let's do it this, and then I will answer your questions. So guys, the biggest flaw in technical analysis is fundamental news data, rumors, and other talks while price action gains the momentum. Eventually, as you already know, fundamental news and red news and those conferences, they all screw, I can say, technical analysis, TA. But eventually, price goes back to technical study, and it just closes where it needs to be. It just calms down and gets back on its tracks. Sometimes it takes a day, sometimes it may take a few hours, but eventually it will all come down to our good beloved TA. And if I remember correctly, prior to year of 1987, there was some testing going on, forward testing, and after that the conclusion was that traders who used technical analysis constantly were constantly in a profit. Well, okay, that was in the year prior to 1987. Today it's a bit different thing. We are living in turmoil times. Times are not great for most of countries. You know, Europe has had crisis, USA also. Well, basically that is life, and we need to deal with it. We should not cry for old times. We should adapt to new times, new generations, and we should all adapt to modern technologies. When I say modern technologies, I think always about trading by internet, interbank market, and by internet. So that is our beloved technical analysis. Without computers, guys, it's very, very hard to do technical analysis. If you want my honest opinion, I couldn't do technical analysis without my trading station, without my charts. I can do it by hand. Well, I'm 37 years old, and you know, I was not made to trade in the times when we did some hand trading. So maybe some older traders remember those times, but you know, today we need to adopt those widespread technical analysis. And now I will tell you what are characteristics and principles of TA. As I already told you, it's very often used by day traders, and its studies suggest the historical behavior of price. That means that all information is already reflected in the market's price. And now you will tell me how. It's very easy to know how. If you look at the charts, you look at the past. And basically, when you do TA, you are just glancing at the past, and you know that past will repeat. History repeats itself. And then you will make up your mind by using historical price, historical buyers, or historical sellers. If we are in an uptrend, we will use historical buyers on that particular time frame. If we are sellers, we will use price data which reflects sellers in that particular time frame. That's all historical data, right? So TA holds the prices already reflected, but all such trends before investors are aware of them. Uncovering those trends is what TA indicators are designed to do, as imperfect as they may be. Well, as I told you, history repeats itself. So we, technical analysts, believe that investors collectively repeat the behavior of the investors that preceded them. To us, technicians, the emotions in the market may be irrational, but they exist. Because all of traders' behavior, historical behavior, repeats itself so often, we believe that recognizable and predictable price patterns will develop on a chart. Recognition of those patterns can allow us, technicians, to select trades that have a higher probability of success. And that means that we are stacking odds in our favor. TA is not limited just to charting, but it always considers price trends. There is also sentiment analysis, but we won't go with that because I don't think that it is important. We need to go with the flow always. And when we, I can say, quote it, predict the price, then we react. And you know my quote is, don't predict, react. We can say that we have made our technical study by predicting the price, but essentially what we did is that we marked historical buyers and historical sellers, and then we zoom into lower time frame to find our entry and react. If the price goes in contrary to our technical analysis, well, we always can do a breakout trade, right? Breakout trade. You usually know when some of those levels are broken, price can go a good 5 to 10 pips just to spike up some stops, and then we can profit on that trade. But we also can use stop loss, so we won't lose much, right? So technical analysis, TA, is more widespreadly used than fundamental analysis because it analyzes historical price, market pairs, and chart patterns. My opinion is that technical analysis is superb compared to FA. But the problem itself, as I told you, lies in central bank interventions and various news releases. The problem of technical analysis lies in fundamental part. When the price behaves technically, you can follow it on 5-minute time frame, on 1-minute time frame, on 15-minute time frame. But sometimes those spikes are just caused by fundamental news, by fundies. We call it fundies. there may be NFP, there is maybe President Draghi speaking, or Mr. Bernanke is having his conference, and then we don't trade. I don't trade because it's not technical trading. For fundamental analysts, there may be some observations how the price will move based on the speech. Traders and investors are listening to every letter of a word that Fed chairman or ECB chairman speak, and they tend to trade those speeches. Because we are not in the action, we are basically listening to a broadcast, or maybe we are listening by internet. We are not actively doing, we are not an active part, we are a passive part of that conference. We don't know where the price will go. And that doesn't have to do anything with technical trading. Okay? So the price moves in trends, history repeats itself, and by doing a technical analysis, we can always backtest the data. Backtesting is also very important. Some time ago, backtesting was very, very hard because we didn't have an opportunity to use internet, to use modern days of communication, and it was very, very hard. So systematic trading is most often employed after testing a strategy on historical data. And that is a definition of backtesting. So it's often performed for technical indicators, for artificial robots called EAs, or maybe some of your strategies. So another advantage of TA is to use backtest. You can always go and scroll to the left of your chart to backtest your analysis, price behavior, or your strategy. You can use computed algorithms in MetaTrader 4 platform to test your strategy, or artificial intelligence robot called EA. But how I do it, I always scroll to the left of my charts to backtest either my strategy or my technical analysis. So it is very, very advanced way of using technical analysis and MetaTrader 4 platform. So how are we making profits using technical analysis? Well, let's say that we are having an uptrend, and we are basing the premise, for example, that most investors are bullish and they have already bought into the market, and thus anticipating higher prices. And because most investors are bullish and invested, we can assume that very few buyers remain. Well, this leaves more potential for sellers, right, than buyers, despite the bullish trend. So that suggests that prices will trend down, and that is example of counter trend trading. So guys, that is why sometimes I base my analysis on counter trend. I just presume that the price has reached the bottom or has reached its top, that very few of sellers or buyers remain, so we can go by contrarian trade, in counter trend trade. And that is what most of those various analysts on various websites such as Forex Street or so on are commonly mistaken, because trend will not last forever. Well, especially if we day trade. And technical analysis is very, very commonly used in day trading. So we can exploit counter trend trades in addition to trend trades. That is also a big aspect of TA. Now, let's talk about fundamental analysis. So, fundamental, or FA, is the analysis of the overall state of the economy, interest rates, production, earnings, and management. So, fundamental analysis, FA is the interpretation of statistical reports and economic indicators. Things like changes in interest rates, employment reports, and the latest inflation indicators all fall into the realm of FA. Well, we forex traders must pay a close attention to those indicators which have a direct and to some degree predictable impact on the value of a nation's currency in the forex market. So, given the impact of those indicators that can have on exchange rates, it's very important to know beforehand when they're due for release. Also, it's very likely that the market pairs or the exchange rate spreads will widen during the release. So also that is how brokers protect themselves. And they protect you because you don't enter in the market while such volatile times. So you always should consult a calendar which can be seen on Forex Factory or other sites and be ready for action or reaction. So FA maintains that markets may misprice a price in the short run, but that the correct price will eventually be reached. Profits can be made by purchasing the mispriced pair and then waiting for the market to recognize its mistake and reprice the exchange rate of a pair. In short, that is what I told you 10 minutes ago. After some FA release data, strong news release, market is going contrary to technical analysis. It's going in opposite way. The whole day was bearish and now again price is incredibly bullish. There is misprice. That's called a misprice. What we should do is wait for the mispriced pair to go into equilibrium phase, to calm down, and then the traders and the market itself will reset itself. I can say it's same as you reset your computer to turn it off and then on again. That will reprice the exchange rate of a pair and trend should resume. That is the answer to a question which many traders, even some experienced ones, ask me: how come that the price is has all day been bearish and suddenly it's bullish? It's always the same answer. It is a news reaction. The price is mispriced and it will correct itself after some time. We need to be patient. We shouldn't ever long into resistance or into support. Let the price come down to technical levels and then let's trade it. If you remember a few weeks ago, Euro USD and other pairs, well, it jumped for 450 pips. I suggested, well, guys, wait. This hasn't anything to do with TA. And then, of course, 2 days after that jump, price has retraced almost, and it was more of 200 pip retrace. It went from 32.00 to 29.98. So wait for the price to calm down, then do the analysis, and then enter into a trade. Don't rush blindly. The thing is that FA tends to have a broader impact on the market than TA. That is usually after NFP. By analyzing NFP, we can say that the price will be bullish or bearish in next few weeks. That is the impact of heavy impact news. NFP is one of heaviest impact news, and it can set a trend for technical analysis, right? It can set a trend for technical analysis. And after the NFP, if you watched my increased webinar about NFP trading, you could say that after watching NFP and observing a daily candle close after the NFP,
You can always analyze to great success NFP post-market action. FA tends to set the foot for TA. It has a broader impact, but then TA kicks in and exploits the advantage of a good fundamental analysis. So the spikes prior to NFP, they don't have to do much with intraday trading. I will show you how to avoid those mistakes later. You just need to calm down, to wait the market to settle, and then do again the technical analysis and see if it's indeed a change of a trend or if it's indeed a mispriced price that will go back to its technical levels. So we say that market is in equilibrium when FA goes along with TA. That means that fundamentals or fundamentals perfectly follow the text. That is the time when we usually make good profits. When FA and TA go along, that means that the price is standing in equilibrium. So we need to wait patiently for our entry, and then we can be in profits. And this is the time when we always do profitable trades. Usually that happens when we have a strong trend and then there is news that confirm that trend, and then after some time the price will retrace after the news and then it will go in the same direction, but we had opportunity to enter earlier, to have a better price after the news. So many traders are very afraid of the news. When the price goes one way, then it goes another way. Okay, but that is an opportunity to go into the market for the better price, especially when fundamental and technical go together. That is most appreciated, and that is where I like also to trade a lot. So now there is a question: how to solve conflicts between TA and FA? So how can we solve those conflicts? Well, guys, this is the quick summary of things, what we should do. Okay, sorry about the sound. Is it better now? I was having maybe some sound problems. Great. So this is a quick summary of what we should do to solve conflicts. Thank you very much for your attention. To solve conflicts between TA and FA. So, intraday analysis should always be made prior to any potential trade in the market. I will show you later the steps, what I do prior to my analysis. Then, you need to get to know the pair which you will trade. That means that you need to get accustomed to the exchange rate that you will trade. Euro USD is not the same as cable, sterling pound. It's not the same as Aussie, Australian dollar. It's not the same as yen pairs. It's not the same for GBP, Swissy. So basically, you need to get to know the pair which you will trade. Always check your calendar first for any red news. So then after you make your analysis, you check your calendar for any red news. Unexpected events, such as central bank interventions and natural disasters, cannot be controlled nor predicted. It's always the risk you need to take. There is a possibility for an earthquake, right? There is a possibility for tsunami, for tornado, for some unexpected event. And also there is a possibility for strong central bank intervention that will misprice the market. That we cannot predict, and that we cannot do anything to stop. The only thing which we can do is to put the stop loss. And that is why also having a stop loss is very, very important. You protect yourself from unexpected events. Guys, if you trade for 5 or 10 years successfully, A day like that can wipe your account. So you can lose 10 years of trading in a single day. And that is why I'm also always telling you, use stop loss. There are a lot of risks in Forex market. And above all are unexpected events, natural disasters, catastrophes, and central bank interventions. That is what you always need to have in mind. Besides that, always respect and follow your charts. It doesn't mean if you have to re-chart your charts. But that means that you should not go on 10 tons of those analysts' websites and read, because each of us will have a different opinion. Read the analysis which you believe the most. If it was proven and if it helped you to make the money, then follow it, it's okay. But always follow what is written on your charts. Don't go blindly. If you have seen that there is a red news hanging around, don't trade 30 minutes or 15 minutes prior to those big news. Close your trades, or again, put your stop loss. Because, as I already told you, those big news tend to misprice the market, give you a short spike in a contra trade in an opposite way, and then it tends to go back to previous technical levels. That is always like that, because price respects what and who? Price respects previous historical buyers and sellers. So don't trade 30 minutes or 50 minutes prior to big red news. As you already know, an unusual spike in the price is probably led by some news release or rumor, and the price will always correct it afterwards. If you want to use FA as a guidance, use NFP. You can use NFP for determining next few week trend. But you cannot know the technical levels just by using FA. So again, you need to apply TA. Again, I cannot stress out how important is that. FA misleads technical traders by spiking the price. Always believe your charts, because the price will correct itself. It will reprice itself, realign with your technical tools. Don't trade on bid rate days prior to NFP, stress test, Fed or ECB conference. Don't trade it, because your account may be in a dangerous position. You can be in the opposite side of the market, and for selling up the price, you need to be very, very patient, especially after some of those interventions. So, price after the fundamental news will reprice, realign with technical levels. After that, you do your analysis again, and then rechart your charts. That is why I usually go with my second analysis after the news. I just want to see if the price will reprice or if the price will reverse. Simple as that, right? So the best solution to a conflict between TA and FA is this. So this is intraday analysis. It falls down into a realm of technical analysis, right? It's a technical analysis, and I will show you how I do it. I cannot show you now how I chart my charts. It's too complicated now. But for you who want to know what are the steps beyond analyzing and doing a technical analysis. These are my personal steps and how I do the intraday analysis. I wake up usually prior to London Open. So either I do the analysis or I wait confirmation 1 hour after London opens up. Why is that so? It's because there are usually news around 10:30 Central European time, right, 10:30 or 10 o'clock, and the price may have fakes just prior to news. After the news, as you already know, the price will reprice or it will reverse, right? It will continue in the trend direction or it will reverse. I don't want to guess what will happen. That is why I usually wait for a confirmation 1 hour after London opens up for my TA. I want those 10-hour news and 10:30 news to pass. Then I see the reaction, and some 10-15 minutes after the news, I can do my analysis. If there is no such news events, I can do it just after London opens up or just prior to London Open. That is when I do analysis on Asia, and I usually base my trades on Asia levels. So that depends if there is 10 on 10:30 news or if the day is free, so we can do it an early analysis. I never do analysis on Frankie Fake. Some time ago, maybe 3-4 years ago, I did some Frankie Fake analysis. Frankie is a fake, then that is why I don't follow it anymore. It usually goes in an opposite direction of what next trend of intraday trend will be. So that is I don't do analysis on Frankie Fake. How I detect levels and patterns? I manually detect levels and patterns. In future webinars, you will see what those basic candlesticks are. So I will show you. I will also show you some patterns. So I manually do those things, and usually the first 3 hours of each session, when volatility is big, I can do a good, successful analysis. So I want to see the chart clearly. I want to draw some trend lines. I apply Fibonacci's, sometimes divergence, and of course chart patterns. Those are triangles, rectangles, flat top, flat bottom, rounded bottom, M pattern, N pattern, whatever. Chart patterns. We will have a webinar about chart patterns. Don't miss that. So when I see that things, I always mark important levels. And I want to price either to touch the level to buy. For example, if I want to buy it, I want to buy into support. Or if it's a breakout, I want to break the support so I can sell into support. Or if it's a long trade or it's a short trade, I want the price to go back close to a resistance, then I will sell it. If there are some mutual vantage points, big important points called confluence, is the better, of course. So if I spot that Fibonacci's or Fibonacci level is in confluence with a trend line, that it gives us a double chance for success. If it's a confluence with the previous sellers and buys, that gives us a triple chance to be very successful in that trade. That is why you do your technical analysis, to mark important levels, to know your entries, your stops, and your target price. Then I wait patiently, zooming into lower time frames for more precise entries. As you know, multiple time frame analysis. I wait for pullback before entering a trade. So if I'm long, I want pull back near the support. If I did my analysis that that will be a short day, I want the price as close to resistance as it can be. If there is no pullback, I will wait for breakout. As always, I use MACD as my greatest tool. Then I wait for patterns near support resistance levels for continuation or reversals. So if my analysis showed me that the price will go long, I would wait for the price to drop, of course. And then I would like to see a reversal pattern, right? I have my personal program for teaching the students. It's called Personal Naked Trading. And it's based on candlesticks, and it's based on those support and resistance levels. And that is how I also usually place my trades. I want to see a pullback. I want to see a reversal pattern, of course, on a lower time frame, and then we go in the direction which our technical analysis told us. So if the price is at 30-30-50, I want long into 30-30-50 on London Open. I will wait for the price to fall, for example, on 30-30-10, 33-10, right, 40 pips. And then I will enter the market. If it doesn't fall, okay, I will wait for the price to go up, and then I will short it, right? That is why I mark those levels. And if you follow my analysis, you can always see that my levels are strictly shown on a screen. And then I say usually go long there, there is a possibility to go short there, there is a possibility to price for the price to reverse. I don't want to give you signals. I want to just present you my opinion. And you can read in between the lines. And if I say, for example, that the price may reverse around 33.50, then there is a hint for you to watch for those systems you follow or for those indicators or patterns around that level. You may have a potential trade, right? Okay. If trade goes in contrary to my direction, it's usually breakout trade. Usually stops have been collected, and I can exploit those few seconds momentum to go long or go short in the break of support or long into resistance. But usually after my trade has gone awry, right? I always watch daily close so I can see, and that is my first hint, if the day will be short or long. If my daily analysis show divergence, well, that may mean either a continuation, if it's a hidden divergence, or if it's a regular divergence, that can mean a reversal, right? So if I see the daily close is having a divergence, for example, a regular divergence, and I can see that the price is very close to a big resistance, well, you know what I will do. I will wait for a small pullback to as close to resistance as it can be, and I will enter the trade. Short, of course. And for that kind of analysis, I prefer 4-hour time frame. So that is how I do my analysis. The basics. But you need to get up early to do that. Some years ago, when I did those Frankie fake trades, I will explain what Frankie fake is later. I usually woke up around 6 o'clock Central Time. I did some trades, and then I continued to sleep because some time ago it was profitable. Now my style of trading has changed, and I don't trade those Frankie opens and fakes. So that is basically what you should do when you are doing your analysis. Wake up early, wait for the price. If there is news, then you wait for the news to pass. Those are the first news. Anywhere between 9 and 10:30 Central European Time. If there is no news, then you can do your analysis early in the morning, just prior to London Open or when London opens up. Use your trend lines, Fibos, patterns, candlesticks patterns, or indicators which you prefer. And then, after that, After you did your analysis, then you wait for either a pullback or a breakout, right? Or eventually reversal trade. After the daily close, you need to watch for divergence, guys. Divergence on daily chart is important. If it's close to resistance, probably next day will be short. If it's close to support and hidden divergence is spotted, then that will be a counter trade. The trend is about to end, and then we wait for pullback as close to resistance as it can be, and then we go long. So that is how counter trades are done. Use the divergence always. Hidden divergence, MACD hidden divergence for countering the trade. That is why I want to see daily close. That is why I'm different to other analysts which usually go only with the trend. I don't. If I spot the divergence on daily, I will do my analysis saying that probably next day will be a counter trade, a retracement in a trend, or maybe a reversal. Right? Okay. Those are some of my examples today. What? Well, this was today, right? You see this? Can someone tell me what is the price of Euro USD at the moment? If you can see your MetaTrader 4 or something, just if you can tell me what is the current price of Euro USD, or I can, or if not, I can 31.90. Okay, that is okay. 31.90. Okay, so this is it, right? You see what I did in the morning. This is today's example. And you see we had a perfect triangle. Well, even if you're novice traders, you can write, you can see, you can chart those two important trend lines. In this example, you can see it that here, here, and here, there are basically three triple top, right? This is a triple top. And there is a horizontal line where it intersects that triple top trend line. You see, in this point, the red line crosses over this trend line over the top. And that is why 32 is important. And of course, I wouldn't go long into 32. You see, the price is very close to big resistance. It has a mini range, which is below this 31.90. So we can either wait for a pullback to that upper yellow line of this mini range and go long, or we can try to short it around 32, right? Around 32. Well, eventually the trade will be either successful or it won't be successful. But the thing is, we know what we should do. And by using technical analysis, we know what should be done. We knew just where the price will go. Okay, now the price is 31.97. Let's say that you have entered around 31.80, and then you had some of your positions around 32 or 32.05. Well, again, you're not in a big loss. You can be in a good profit if it respects this analysis. But above all, you're not in a big loss. Why? Because you didn't short it at the very bottom, or you didn't go long at the very top. You just went with technical analysis saying that around 32 level you can try to go short. Why? There are historical sellers. Look at the left of this technical analysis chart. Look to the left. You see those two candlesticks. They have a bottom. And then there are historical sellers around this level. And then yet again, this spike has failed to close above 32. You see this big candle. That is when euro went 450 pips. You see this big white candle, bullish candle. But the price failed to close above 32. Again, historical sellers. And yet again, and yet again, and yet again. Guys, when you see those kind of historical sellers, well, I just cannot long into 32. I will short it, right? Even though I may be wrong, that is technically correct. When should you go long? At the successful breakout, pullback, continuation, or N pattern. That is when you go long, N pattern. Breakout of 32, pull back to 32 or 31.95, and then breakout of a previous stop. If previous stop is 32.15, we want to see 32.15 broken before we enter a long trade. That is called breakout, pullback, continuation trade. Until then, we trade by levels. Short into resistance, long into support, long into this mini range support or resistance if it isn't broken. Yes, maybe the price will drop. There is a possibility that the price will also, Gito, that the price will retest and the previous stop will be broken. So then we go long, right? If it's breakout, pullback, continuation. It's about 32. I think it's 32.15. If the price goes above 32.15, then it may be a long trade. But also, if it fails to close below 32, now I don't trade. Now it's 6.55. I need to see daily close. But if the price fails to close below, of course that we can have a possibility for the price to drop. If it fails to close below 32, right? But if it closes above 32, there is a possibility that the price will go above 32.15 previous stop, right? And then it is breakout, pullback, continuation. Of course, always look at history, always. History repeats itself, right? So you just do that and you will be okay. Another example which I have about my intraday analysis is this. You remember this, probably. You see, I did this also in the morning and I have spotted a big head and shoulders, although it's not a very perfect head and shoulders. I can say that this is a big head with two smaller shoulders. I have marked those potential short setups here. How did I do that? I marked the presumable neckline. That is a trend line. That trend line, if you see, intersects with this 129.20 red horizontal line. It intersects there. And if you remember, the price went close to 29.20 and then it dropped down, right? Because there were also historical sellers. And this is 4-hour chart. We use it for intraday analysis. So it's valid for one day or one session. And you see the price went there and then it dropped off. And I think that target price has been also achieved after that. So it's simple. Just watch the charts. Use your common sense. First of all, you need to know about those patterns, those candlesticks formations, and so on. But you see, this is not very, very complicated. I drew the trend line. I marked those levels. I have some I have experience in forex market. That is why I can mark those levels by my hand. But by screening time, you also will know how to do that. I'm not the smartest guy on the market, but I use my experience and common sense to trade the price. So I use those red lines as important levels to go short into the market, right? The next example is practical use of those red levels and Fibonacci trading. So there is at 61.8 there was a confluence. This was a support, previous support. Also, we are having a downtrend. That means that somewhere around 61.8 the price has made a temporary resistance because the support, X support was broken and now it's resistance. Of course, it's in confluence with 61.8. This is a trend trading. Use Fibonacci retracer for trend trading. The price, I waited for the price to go around 50 or 61.8 to go short, because my stop will be just above this last higher high, or just above this 61.8. My dead stop would be above this 100% retracement Fibo. But around this 61.8 will be my first stop. And I will go short there. Why? Because it's a trend, because it's a huge downtrend, and because the price is retracing in downtrend. At least it can give me a scalp trade, right? If I don't go for full, I don't know, 50 pips, I can go for a good 10 pips, 15, 20 pips. Why not? 20 pips is good when you are countering the trade. It's not. If it is good if you go for 20 pips each day and you use your compounding account, by using a half of your lot size, you can be a millionaire in a year. If you just make that 20 pips a daily. So we want to make those pips. We want the price to test our technical analysis level. We will be patient. We will enter the trade on a confluence, and probably the price will drop. As you see, I don't use any stochastic or something to tell me to enter into the market. I do it manually, right? Do it by my technical analysis, right? Okay, I think that now you know about TA and FA and how I see difference between TA and FA. And if you listen to me, I think that you will be good, because I am a technical trader. I respect fundamental analysis, but I don't trade when such big news are out. As you already know, I restrain myself from making analysis when big news are out. So guys, TA for the win, right? But respect the market. Use stop loss, don't overtrade, and don't over leverage your account. And use fundamental analysis if you want to spot a hint of a future trend, especially after NFP. FA after NFP is very, very important. Now I will answer your questions. Prior to that, be sure to follow me and Chris and Admiral Marcus in social media such as Twitter. I have opened my Twitter account also. My Twitter name is TarantulaFix. You can always and do always follow the analysis. If you're not sure, ask questions, guys. I will answer to any of your questions. I always post on Admiral Markets website and blog, and you will always get my attention. I will always respond to you. Or you can use my thread also. I will respond to you. Admiral Markets is our host broker. It's hosted, all of those webinars are hosted by Admiral Markets. I'm very thankful because I can help you, and Admiral Markets is a bridge between me and you. And while I'm here, I will always try and be helpful to you. So we will have many more webinars. We will have many more social meetings. And there are many more projects that are undergoing in Admiral Markets. So be sure to like us on Facebook page and follow us, of course, on Twitter and blogs. So let's start with questions. I'm going okay, up, okay. Let's see the questions. Okay, what is a Frankie fake? Frankie is Frankfurt open. Frankfurt stock market usually opens prior to London market. Fake means false. If the trend, future trend, in a London open is bullish, Frankfurt usually goes bearish. And the price usually goes in opposite direction in Frankie than it will go in London. So Frankie fake is a Frankfurt fake. It's a fake, it's a false, it's a lie. The price will usually go in an opposite direction of a future price action in London market. That is because Frankfurt prepares the market for London traders. So if the London is going to be long, Frankfurt usually spikes down the prices, leading you to believe that the trend will be bearish. But then usually the price spikes up and continue prior to Frankie in its real direction. So that is why Frankie is called fake. It's a lie. Frankfurt open. Okay, next question is, so you're saying that the price will drop. Okay, I answered all the answer to that question. If the price will drop, it will be below 32, of course. If it goes up, it needs to make a breakout pullback continuation. Don't predict now, react. You know the levels, you will see what will happen. Of course, it's technically valid to short into 32 or 32.5. It's technically valid because it's a resistance. It's not support, it's still a resistance. Always look at the history. My email, you can contact me via Skype, guys. My Skype is, I will show you my Skype, and I can always respond to you. Is TarantulaFX is my Skype name. And if you want to send me a message, you can do in Spider's Den. Just find Tarantula in Spider's Den. That is my nickname in Spider's Den. You can send me, or you can use my Facebook, Tarantula Forex Trader. It's okay. My Twitter name is this TarantulaFX. This is my Twitter name. PowerPoint presentation. I think that is being, Daniel, it's being, I think it's being recorded. So it will be fully uploaded on Admiral Market site. Okay, it will be uploaded. London starts at 9 a.m. This is London starts at 9 a.m. right? And Frankie starts just prior to London Open. So guys, again, I will show you. London is 9 a.m. Frankie is 8 a.m. Okay. Prior to London Open. No problems. You're all welcome, guys. Now, let's see. What do you think of candlesticks? Of candlestick, Victor, right? I don't understand you. I'm thinking all the best for candlesticks. I use candlesticks for determining reversal points or continuations. What should be ideal order size of the trade position with a deposit of $500? Ha. This is ideal deposit. I will write you. Yeah, well, you know my teaching about money management. 0.05 up to maximum 0.1. Well, if you want to be a little bit riskier on $500 account, you can use just a bit for scalping 0.2, but I don't recommend it. You see, that is very hard to achieve with 500, but well, you can do it. If you want me to ideal, that is ideal. So because you will you will safeguard your account. Another question. If you have another question, now I will show you Let me show you a website. I will try to show you a website to see at correct market hours. So you will always know when and each session is going on. It's not Forex market hours. It's a bit of a strange site. It doesn't display correctly always. But Forex time zone converter, that is also very, very good site. Forex market time converter, and I will show you. The site is Forex time zone converter. This is very good site for you if you want to see what time zone is your London on Frankie Open. And if that's all, guys, we can call it a day. Be with me and Chris on Wednesday. I think it's the next webinar. Check it. I think it's on Wednesday. We will be talking about very interesting stuff. I expect you there. And that will be my last webinar for August because I will be having a holiday. But I will be back very soon. And I will start again from 15th of August, doing my personal and mutual webinars with Chris. And we will be having many more those kind of webinars and social inter-meetings after that. So guys, be ready to trade. Be always willing to trade. Trade carefully. Be wary of the market. Listen to our advice. And I'm very glad for you that you paid attention to this. I hope that you have learned something. And see you very, very soon. Don't forget to follow me, Admiral Markets, together on Facebook, on blogs, and we are here to help you and to feel better. Thank you very much for your attention, and see you very, very soon. Bye-bye.
The organizer